Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, I would like to state the disclaimer. Whatever stocks we discuss are intended only for educational purpose, should not be taken as an investment advice. Here is a Nifty's daily chart taken from our website. It's very important to understand the Nifty's price volume action to get an overview of how the markets are performing, and it is also important to read market direction from only lens. Let's start by looking at price volume action on the Nifty front. You can see clearly Nifty was in the downtrend and it reached its key moving averages, starting from small near-term moving averages such as 21, 50, 100, and recently 200 DMA was also breached, which is a black line here. After breaching 200 DMA, the fall was very sharper on the Nifty. It's not just about Nifty. The overall markets were not doing well. It was a broad-based selling. It happened across the sectors and across the indices such as mid cap and small cap as well. Because of this sharp fall and Nifty breaching its recent correction low, we have changed the market status to a downtrend from rally attempt. Yesterday, Nifty managed to close in the green, and hence yesterday's session will be considered as day one of attempted rally. And yesterday's low, which is around 16,850, is a crucial level for the Nifty. If the Nifty doesn't breach that level in the next two sessions, that is in the today's session and tomorrow's session, then we'll be changing the market status to rally attempt. From rally attempt, we'll be looking for a follow through day to change the market status to confirm uptrend. However, the volatility has been on the higher side, and clearly the direction on the markets is on the lower side. So we might not expect to see a clear momentum on the higher side. 200 DMA and 50 DMA, which will be acting as a clear resistance going forward. So Nifty should find good buying support among its major stocks, such as heavyweight stocks, more predominantly. Then only we'll be seeing momentum on the higher side. Until then, we might see Nifty moving on the sideways or a zigzag movement here and there. So from only lens, we are in a downtrend, and we'll be looking at yesterday's low to hold to change the market status to rally attempt. Coming to model portfolio, we are staying sidelines because of this downfall. It's very important to advise capital preservation rules to the clients here, because whenever the market is on the downside, most of the stocks will also follow the market. Market is nothing but a accumulation of or summation of stocks movement. So in this downtrend market, whichever stocks are in the portfolio will definitely breach their moving averages as well. So it's better to stay on the sidelines rather than taking losses. When the market is in confirmed uptrend, then the probability of breakouts will be on the higher side, and the gains from the growth stocks will be on the higher side. Some of the key stocks which are in the news and which will be under radar in the today's trading session are one of the major news is Tata Consultancy Services, which is a TCS, or leading major IT services provider in the country. The current CEO and MD, Rajesh Gopinathan, has resigned from the post. Mr. K Krithivasan will be taking the post post this resignation process. So this stock will be under radar, and it will be keenly watched by the analysts in the today's trading session. HAL, the council has approved to procure 80 UH marine choppers for a consideration amount of 32,000 crores. Positive for the company. Volta's subsidiary Universal MEP Projects has backed multiple projects, and worth of these projects are nearly 770 crores. Again, a positive for the company as well. Coming to the macro front, European Central Bank ECB has increased interest rates again by 50 bps to 3.5%. This is the highest interest rate since October 2008. On one side, European nations and US nations have been increasing the interest rates because of higher inflation rates. Recently, we have seen heavy pressure in the US banking sector because of higher interest rates. There has been asset liability mismatch happening in most of the some of the banks in US. That is a major reason for the recent downfall. So higher interest rates regime is going to stay further. The interest rates have been on the higher side across the globe, not just for any specific region. Even in India, we have seen the multiple rate hikes by the RBI. Relatively, we have been doing very good because Indian market is habituated to higher interest rates, but these US nations and US and European nations are not habituated to these higher interest rates. Most of the time, their interest rates stay near 0 to 1%. So this is new thing which is not taken. They are not able to digest these higher interest rates. That is the reason the pressure is on on these regions more compared to India. In the institutional front, yesterday FIS have sold 282 crores of equities, whereas the domestic institutional investors have bought more than 2,000 crores of equities in the Indian market. There is a fresh hope of a rally happening in the US market, mostly because of shorts being covered. You can see major three indices in the US market, Dow Jones, S&P, Nasdaq have closed more than 1%, clearly indicating good strength in the market. But we would like to see follow-up buying happening in these markets as well going forward. Asia markets are taking good positive cues from the US market, and they are also trading nearly 0.6 to 0.7% higher. Major three indices which we track are Shanghai 0.7% higher, Kospi and Nikkei are also trading 0.6 to 0.7% higher. Definitely, the global cues are on the higher side. US market closing more than 1% higher. Asian markets are also trading 0.7% higher. SGX Nifty is also indicating a similar opening for the market. Yesterday, Nifty closed at near the 17,000 level. So 150 point higher opening is expected on the market. If the higher opening is sustained, then we might see a good amount of buying happening in the markets because shorts will also get covered in this gap up opening. Once these shorts are covered, if the fresh longs are added in the market, definitely a positive sign for the market. If the Nifty doesn't breach yesterday's low in the today's and tomorrow's session, will be back to rally attempt and we'll be adding stocks to buy watch list. The stocks which are resilient in the market will definitely do well in the market going forward. Thanks for joining today's debate. Have a good